Hi again, this is Yoni Zofan from the IGS Commercial Industrial Sales Department, and it is currently the last week of April. Hockey playoff season is upon us, and I bring up the hockey playoffs because not only are the Blue Jackets doing well, but there's actually quite some similarities between what's transpired in the energy markets and the hockey season over the past year. In hockey, the Tampa Bay Lightning have been the constant. They were the leader from the beginning of the year to the end and the favorite to win the Stanley Cup. In the natural gas and energy markets, the NYMEX has had a constant as well. Energy prices have been more expensive for the current year and were cheaper in further out years. This is called backwardization, where the market is not always going up in the future, but actually down first for a little bit. The reason why the two are comparable is because those two things have both flipped onto themselves just recently. The Columbus Blue Jackets swept the Tampa Bay Lightning out of the first round of the hockey playoffs, and the backwardization in the natural gas markets has reversed itself. Over the past month or so, we've seen natural gas prices drop for the near year, such that they are now cheaper than further out years. The reason why they're dropping is higher storage levels. The higher storage is coming from increased production and not as much use for that natural gas, especially here in the shoulder season, in the spring, where there's no heating demand and no cooling demand for natural gas. And so what we've seen is more gas being injected into storage. And most recently, this past week, we flipped to the point that we are now higher in storage this year than we were at this time last year, which has taken us more than a full year to get to that point. With that, natural gas prices have dropped, and we see a really good buying opportunity in natural gas, both in the short term and the long term, because the prices are in contango. They're slightly more expensive year over year, but not too expensive. So there's very little premium in place. In the power market, however, we still see a slight differential, a slight backwardization from one year to the next for the first year, second year, and third year for power prices. And that begs the question, why are natural gas prices, NYMEX prices, moving one way, but power prices moving the other way? And the answer is we need to peel back one more layer of this onion in energy markets. In the natural gas world, when we talk about NYMEX, we're talking about prices in Louisiana at the Henry Hub. And that's the domestically used point to gauge natural gas prices. In the power world, when we talk about prices, we're talking about power prices in each market specifically. And so they're already in our backyard. To compare a backyard price, if you will, for power and for gas, we need to add basis to the NYMEX prices for gas. When I add basis prices, current basis prices, you actually get a very similar natural gas and electric curve. For natural gas, the current year, the basis is more expensive than future years. So, if we add the current year more expensive basis with cheaper NYMEX, and what we see is that the summation of those two, the price in our backyard, is actually a little cheaper this year than it is next year Power prices are in contango, and so are the summation of NYMEX and basis prices. They are in contango as well. That means the two are acting in the same general manner, which we would expect, and they both are at attractive price points for end users. The NYMEX prices are low, and they've dropped recently in the prompt months, in the nearer months, and the basis prices are at attractive levels, making NYMEX prices attractive as well as power prices attractive. So whether you're a natural gas user or a power user, I would strongly encourage you to take advantage of these both cheaper near-term and cheaper long-term prices and act accordingly. In the natural gas world, for larger users, I would strongly encourage you to both look at basis and NYMEX and not only consider NYMEX when developing your hedging and NYMEX strategy. I wish everybody a good day, and go Blue Jackets.